I've been getting a lot of questions about the consistency rule. What is the consistency rule? How do you know if you qualify for a payout trading prop firms? There's some very easy calculations I'm going to show you guys how to do. But first, I'm just going to explain what is the consistency rule. So I trade with Topone Futures. They're a prop firm. They fund the traders with capital. You can either do a straight to sim funded account or a challenge account where with the challenge account, you prove your worth. You say, I am willing to take this test and show you that I can make 6% without going under 4%. And then you get the account, and that would be for $49 a month plus a $150 activation fee. Or you could do the sim funded account where you skip the activation and you skip the challenge part, and you're just funded. You're a funded trader, and you basically just have to make, I think it's $2,000 on a 50K account to withdraw $2,000. So there's only one rule, which is the consistency rule that you have to follow. And that means no one day can be bigger than 20% of your total profit. And for the challenge accounts, once you're funded, it's 25% consistency rule. So I'm going to show you guys the different what would you call it, calculations that you can do yourself to figure out whether you are within the consistency rule. So last thing before we get to that, I trade with Topone Futures because they have Project X. You can use my code in the description for 50% off of your account. And the reason I use it is because there is not a single other prop firm out there that has straight to sim funded accounts and Project X. The reason it's so important is that you can copy trade. Copy trading allows you to use more capital and essentially take one trade but with more capital, because you can transfer it across multiple accounts. So you can see I made $580 today, but really I made like $1,200 today. So back to the consistency rule. Easy calculations to know if you qualify for a payout. Let's do some quick math here. So the payout, you need to make $3,000 on a 150K to be eligible for a payout. $3,000. And then basically the payout goal divided by 5 for the 20% divided by 5 equals $600. So if you make $600 for 5 days straight, you've made $3,000 and you are immediately eligible for a payout. Let me make sure I got that math right. That was quick math in my head, but 3,000 divided by 5, yep, 600. Okay. Yeah, because 30. So with a 25% consistency rule on a $2,000, sorry for the math, $2,000, you do divided by 4, and that means you just have to make $500 per day. Now, it's okay if you go over this number. If you go over that number, it's okay, and I'm going to show you the calculation to calculate how much you would need if you go over. So if you go over, you're going to do the highest day's P&L multiplied by 5, and that is going to give you the total P&L you need to make to be eligible for a payout within the consistency rule. So let's say your biggest day was $1,000 on a 150K straight to sim funded account. That means that you need to multiply that number by 5, and then now you get 5K. So now you know that you need to make 5K before you're going to be eligible for a payout. That's why it's important to stay within the consistency rule, because if you make too much money, this sounds silly, but if you make too much money, you're going to have to make a lot more than if you just stayed within the consistency rule. So I'm going for a 3K payout. I made $600. That puts me right at the 5% or 20% consistency rule. So I just got to keep that up. Now, let's say you are trading a account that, what I'm trying to say here is you can have 10 trading days, you can have 20 trading days to get a payout, and you don't have to follow the consistency rule. The consistency rule is only applied for the highest P&L number of the day of the account. So you're trading a 150K account, and then let's say your P&L, let's do it like this. let's say your P&L for the 150K account goes something like this. You make 200, then you make 400, then you make 600, then you lose 600, and then you make 500, and so on and so forth like this. As long as the number is under this $600, because that is for the payout that I'm trying to get of $3,000, I have to make under 20% of that per day. If you want to go for a larger payout, then that's where you just do your payout goal divided by 5. So you could take as many trading days as you want. The consistency rule has nothing to do with the number of days traded and only has to do with the amount of P&L you're making each day. So I hope this answers some questions. It was a relatively quick video, but it's a pretty short headline to cover. And again, if you guys need any Top1 Futures accounts, use the code Thomas in the description for 50% off and to potentially be entered for a giveaway.